So welcome, everyone. Welcome to the Audit Committee for the fiscal year 2023. As the clerk, I'll be briefly chairing this meeting until the committee appoints its own chair. I just also want to briefly acknowledge and welcome our auditors who are joining online from BDO, and as well as any members of the public that are joining us online as well. So the first order of business, the call to order, I will do a roll call for the committee members. Councillor Atkinson. Present. Councillor Cook. Present. Councillor Loosely. Present. Councillor Miller. Present. Deputy Warden White. Present. And Warden Marriott. Present. We have quorum. So our next order of business is a selection of the committee chair. Is anyone wanting to nominate? Councillor Atkinson.
Thank you. I'd like to nominate Councillor Cook, please.
Councillor Cook, are you willing to act as chair? And do we have a seconder?
I'll second that.
All in favor? Councillor Cook, please go ahead.
Thank you, and welcome everybody to our audit presentation for today. Welcome our auditors, Ferruccio Da Sacco and Gail Koehler from BDO, and they have a presentation that they're going to be doing for us. Good morning, and you can start your presentation at any time. Thank you.
Thank you. Good morning, everyone. Ferruccio Da Sacco here, along with Gail. I'm a partner and have been for 11 years with the firm's over 20. First year on the engagement. I think you've had Pete for a number of years, and Pete is lucky enough to get to retire at the end of this month. So we're happy for him and wish him all the best. So we have a agenda that's in your package that we'll go through. If there's questions, by all means, stop us and ask. Hopefully it's, I would make a joke that if this is a boring meeting, then that's a good thing. So, all right, we'll go through the audit report highlights of the financial statements, and I'll be doing parts of it and Gail will be doing other parts. So on the auditor's report, I've never read one in a meeting. I don't think you guys want me to, but it's in your package. But I will say that it's a clean audit opinion that we're proposing. I just want to say tremendous thanks to Lori and Larry and Steph on their support throughout the audit. Anything we needed was provided, and they were tremendous when we're out there in field to help us along with the engagement. So a clean audit report. The financial statements themselves are the responsibility of management. What we own is really the audit report. So that's how that works, and it's kind of highlighted in the financial statements as well as in the notes. Next, Gail. So I'll be doing the statement of financial position kind of highlights, and Gail will go through the statement of operations, talk about the revenue expenses, and then we'll have some summation at the end. Next slide. So this is really just a summary. It's always nice to see trending and see where you're at. So we present a 3-year summary. Those are obviously in thousands. So you were sitting with 96 million in cash and temporary investments, a bit higher than where it was in the prior year. That also includes any reserve funds that you put away, as well as all your general accounts, which there's a dozen general bank accounts that we go through and do our audit work on. But on a holistic basis, between cash and receivables, if you look, your total financial assets are almost identical to where they were in the prior year. So really, it's some timing with some of your receivables. Last year a bit higher. This year they were collected, and a lot of it has to do with some provincial funding that came in the timing of said funding. Next, Gail. On the financial liability side, These are really your trade payables, things that come in and you pay within 30 days. We went through all that, and you also accrue anything that relates to 2023 is accrued and provided for in 2023. So if it's a wages that were earned and paid in early 24, those are accrued and as a liability and a obligation and expense in that year, so that you're really looking at all the expenses that relate to that 2023 fiscal year. Went through no issues in terms of audit side on the payables and accrued liabilities. Everything that ought to have been accrued for, provided for, has been. Deferred revenue, that's really your Ontario infrastructure money. So $4.7 million there, that and some gas tax. Long-term debt, we'll go through that in a bit, but you see that continuously going down each year. No new debt this year, and just continue pay down of that amount. The new one this year that came in, and I'm maybe some of you have seen it in other organizations, is this concept of an asset retirement obligation. New this year in 2023, but we had to do the comparative number for 2022 in the presentation. That's why you see in 2021 that's zero. So really going through and assessing all your assets and what could be the legal obligation to retire that asset. So we looked at a lot of aspects of like asbestos, water mains, and anything that needed or required remediation in order to retire said asset. We were quite happy with the process that management went through to assess the completeness of the obligations, the quantification of it, and the amount presented to be $13 million in today's dollars. The notes share that the undiscounted, meaning the future obligation, is really 21, but in today's dollars, we're looking at $13 million presented in the financial statements. Employee future benefits, 4.7, and then accrued tax liabilities, 1.8. So total financial liabilities, $78 million, and again, no audit concerns that I would like to bring forward to the committee. Next slide. Fairly straightforward. Again, I just like to see that nice trending downwards in terms of our long-term debt, really using your budget well in terms of planning for expenditures and using funds and then paying down that debt each and every year. So you're down to 25.4 million, which is a reduction of over $10 million from where you were just 5 years ago. Next. This just kind of lays out the plans over the next few years. So, we flash forward 5 years from now, and that number will be $12 million less than it is today. So it just kind of gives you an idea of the payments over the next period of time. And again, that's presented in detail each year by year in the financial statements. Tangible capital assets have been an area where there's been tremendous investment each and every year. So this year there was $24.5 million of capital asset additions, whereas the amortization one, which is the write-off of the asset over time, was only 19. So that we see this increase each and every year to the point where you have accumulated tangible capital assets of over $300 million now on the books, versus 335 of accumulated surplus. So just showing the majority of your assets are made up of tangible capital assets, which makes sense on a global basis for sure. Next, Gail. Just a summation and a history on your reserves. We do a lot of audit work with respect to making sure that your reserves are consistent with what the committees have approved, what council have approved by each individual reserve fund. And again, no audit concerns there, but total reserve funds, which are detailed on schedules 3 and 4 of the financial statements, are $87 million at the end of fiscal 2023. And again, consistent with the amounts approved by council. Then Gail, I'll let you kind of talk about the in-year activity.
Good morning, everyone. So this is the revenue. So this slide shows a comparison of budgeted revenue to actual. Actual revenues were 7.4 million higher than budget, or 2.96% higher. So the reasons behind the increase relates to increases in provincial government transfers, federal government transfers, and investment income during the year. So the provincial government transfers came from additional funding for homelessness and long-term care. And investment income, there has been higher interest rates, and so you've benefited from that. So this slide shows the revenue in pie format. So you'll note that 49% comes from provincial government transfers, and over 34% from taxation revenue, and almost 10% from user charges. Expenses. So this slide shows a comparison of budgeted expenses by function to actual. Actual expenses were 4.2 million, or 1.75% higher than budget. So the two largest variances are social and family services and social housing. So social and family services exceeded budget by 2.5 million due to higher living costs such as rent and higher caseloads. So social housing actual costs exceeded budget by almost 2.8 million due to increases in utilities, insurance, and additional staff. The other lines are fairly consistent. Total expenses for the year were 246 million. So moving to this slide. So this is expenses on an object basis. And you can see this can be found in your financial statements on page 10, or sorry, page 12, and it's note 10. So overall, most of the cost groupings have remained relatively consistent when compared with the prior year, with the exception of salary, wages, and benefits, and contributions to other organizations. So salaries increased when compared to the prior year, mainly due to increases in hours of care in long-term care homes. Contributions to the other organizations, or to other organizations, have increased due to increases in Ontario Works client allowance. And then this slide shows the expenses in pie format. As you can note, there's 42% that was spent on salaries, wages, and benefits, over 31% on materials, 14% on contributions to other organizations.
Yeah, and then I'll just highlight a couple of the notes for the committee. So in note 7, you'll see that it talks about the pension contributions. This year, $6.7 million. It also notes in there that OMERS is running a deficit, and it has been for a number of years based on their actuarial assessment. As is normal practice, because you're in a multi-employer, you don't actually record that your pro rata share of that deficit or that shortfall as a liability, just the contributions made. But you are required to disclose to the users the shortfall in the OMERS pensions, and which you have. Note 17 has the $2.1 million loan guarantee to SWIFT. That's been on there and hasn't changed since 2019. And then note 18 has all the commitments. So anything that's been committed in terms of funds or activities that hasn't hit yet, that will hit in 24 beyond, we're required to disclose to the users because there's a commitment of funds so that users know, hey, these funds have been earmarked for these projects going forward, or committed for leases or rent or what have you. So that's all standard required disclosures. Next one is the trust highlights. Again, nothing of note there. The trust funds, there's 90,000 of fund assets and fund balances. Unqualified audit opinion, nothing of concern there. And then the main page here, the last slide. In our final report to those charged with governance, which is really our communication to the audit committee for the year, we highlight our independence in there, which is of utmost importance in terms of maintaining our independence as auditors and confirming that both at the beginning and end of the engagement. Materiality was set at just over $7 million, 3% of revenue, consistent with the approach we've done in the prior year, and consistent with majority of public sector entities that I audit in terms of percentage and the basis that we're using. The schedule of likely aggregate misstatements, there's a small estimation difference that we calculated on ARO just on the discount rate that we didn't want or didn't need to adjust, and that will go up and down based on cost of borrowing each year, but no issues at all in respect to any findings or any disagreements with management on any matters. And our management rep letter is also included, and all general representations, no issues at all. Again, I want to highlight the clean audit opinion, the support provided by management, which was outstanding in terms of getting this done. It's a large audit and requires a lot of support to get it across the finish line. So thank you to them. And yeah, we're open to any questions you may have. In that package, I will say that there's a couple of links. You can use a QR code to do some reading. There's one on ARO and others. There's a spotlight on public sector. So some really good articles and insights that, if you have time, I think they're quite helpful in terms of reads. So we've shared those with the committee.
Okay, thank you for your presentation. Is there any questions of the committee? Councillor Atkinson.
Thank you, Mr. Chair. Going back to one of the previous slides that Mr. Da Sacco was showing, it showed the employee benefits payable, and I believe it was showing 4,793 up from about 369 something to staff. Is that the reason that payables has increased? Is that because we've had more employees that are deserving of their benefits, or is it the cost of the benefits package itself that's increased?
Yeah, I think it's a cost of the benefit package more than anything else, and I think that's consistent across the board in what we're seeing. So it was a great question, but yeah, it's really a cost of service item, and I think that's across all sectors. We're seeing that cost going up, people utilizing the services more, therefore that cost increase.
I know we've seen it in our own municipalities where our benefits are increasing, and I'm presuming that this is what was happening here, but just wanted to confirm it.
No, that's a great question.
Thank you.
Thank you. I just want to comment that it's great to see our reserves going up. They went 40 million over the last 5 years, which is a good comment to our treasurer, our director of finance, for getting us going in the right direction, and a commitment by this council to keep the revenues going into that reserve. Any other questions from the committee? Okay. Seeing none, thank you. We'll move on to item 4, which is our consolidated financial statements. And the statements are there for review. Everyone's taken the time to look them over, I'm guessing. Yeah, there's the two statements. There's the consolidated financial and there's the 2023 trust fund financial statements also. Any questions for our treasurer or auditors on these statements? Okay, seeing none, can you get a motion to receive these statements? Thank you. Moved by Deputy Mayor White, second by Councillor Loosely. All in favor? Thank you. Item B is the final report to the Audit Committee. And look that over. And seeing any questions on that report? Seeing no questions, I get a motion to receive, please. Councillor Atkinson. Councillor Miller, all in favor? Thank you. And the auditor's management letter is there for review. It is a clean audit. And any identified matters are discussed in Appendix 1 to the agenda, or to the letter. And there's a few things there that were discussed, but doesn't look like anything major. Any questions on that report? Get a motion to receive. Deputy Mayor White, Councillor Loosely, all in favor? Thank you. Item B is the auditor's correspondence and draft response letter. So this is the letter that they've sent out asking us about the original audit. We get a motion to receive that, please. Councillor Loosely, Warden Marriott, questions? All in favor? Thank you. And item C, further discussion. I guess we'll ask our Larry to leave and our staff for a minute and have a discussion with our auditors.
I'll just briefly note for anyone following online as well. So management is excusing themselves to give an opportunity for the audit committee to have further discussions with the auditors on a private in-camera basis. So anyone following online, the live stream will end. Thank you for attending.